Hello. Okay, so sound clear? All good. We commencing 11 December analysis. So this week a lot of news is obviously on the horizon. Obviously we need to wait for that first before we do anything else. So Monday didn't really have anything, although we had a great run here with this shorting opportunity. But we had to just keep it really low-hanging fruit. No big, expectations because we're just opening up the week. A lot can happen, especially with all the news. So that was a good trade. Low resistance, first TP hit, and then it was just sideways, and we just closed it. Time stop. Now Tuesday, yes, CPI is coming out. Definitely do not want to be trading right before that. It's risky. It's stupid. Even if you are on side, a lot of the times um, it's just gonna basically run real hard against the direction that it's actually gonna run. And because of the slippage, your stop's just not gonna be able to protect you. So it's just stupid to do that. I'm gonna see if there's anything after CPI. Something that I like, something that's easy, low resistance, and that will work in the time that we have left after CPI. So after 1:30, and we'll go from there. And then Wednesday, you do still have more news. Uh, PPI numbers are no big deal. We can still trade that. Our Fed interest rate decision, that's a tricky one. Three things that are really like volatile. Two of them are in this week. So Fed interest rate, CPI, and the third one is FOMC. Now, we did real good with the FOMC last week, but that is not to say we should push our luck this week with these news events here. So what I would probably look at here is, you know, letting these news, especially tomorrow, I'm not going to engage it before, but with the Fed, now with Fed, what I've noticed is, yes, you can have a shitty day, like you can have a really corrective day, but equally, you can also have a good day. It does run a lot, and it just completely eats up all the daily range, and then by the time you have Fed, it doesn't even move because it's already used up. So again, something I'll need to observe first, what happens tomorrow, and then based on that, we'll have to make a decision to engage or not. ECB, again, very volatile event, but again, if it's extremely clear and I can use a sufficient stop loss, then yes, I may engage that, depending on if it's extremely one-sided and clear to me. If it's not, if I'm just, feeling doubt, then I'm just going to leave that out. And then finally, Friday, mild news, nothing big. So yeah, that's the week. Chart-wise, starting with the DXY, start with that first. Actually, just over the euro, because I've already got things drawn on. I like how we closed in the BISI of the weekly. Bodies inside, okay. Not much information provided on Monday. We had an inside day, to be honest. Okay, so not much excitement there. But tomorrow, if it's still risk on and we're going higher for this BISI, and we closed last week inside of the big BISI, on the weekly, then I would obviously expect a counter to that, okay? If we're going to be going up, then I would expect it to go against that to pair up with. So Smart One can pair up its longs against the shorts, okay? And what better place to do that than these two previous daily lows, so Mondays and Fridays. So this is actually a previous weekly low as well. And also the fact that we still have unfinished business here with a fair value gap. And of course, there's an order block here you can look at. So 1, 2, 3. My main focus is the weekly low slash this remaining part of the fair value gap. That's the big key focus that I am anticipating. So I'm just going to mark that here. Now, if you manage to stay inside of that, I don't want a body of the daily, at least closing outside of this fair value gap. This is the line in the sand for me to still be bullish. Anything closing below, then we can start looking for more discount levels like these fair value gaps and trend line liquidity and the sorts. But yeah, so long as we close inside this, then my expectation is this SIBI. And then eventually here, okay? So still risk on, okay? But CPI can change a lot of things, so that's why I need to wait for that to give me more intel. because what I think it may do is with CPI, it can like real like if you stay in premium before CPI, then I think it can run real hard against like one side and just take these levels out, this fair value gap out with CPI. I think that's what they can do. If we stay in premium, what if we don't? What if we just take out as soon as we open? You know, we're super discount. We've taken everything out here. Well, if that happens, then of course I'll be expecting a reversal into some of the premium 4 hour or hourly levels. So straight away eyes here. Then you're like, if obviously we do away with all the discount levels, then equal highs here, and then of course work our way here. That's what I would think. But that's again if you open a real discount. So we'll have to see what happens. I've just highlighted both scenarios and also made it clear I don't know which one it's gonna hit. So we're gonna have to wait and see which one it gets first. So now if you just go on the DXY. So obviously inversion, we closed below that, which is which is a good sign, I guess. But what I'm more interested right now is to look at the daily, the weekly inversion. Okay, should have used it as a support, didn't. We closed way below that. So now what I want to see is if we will use that as a resistance, basically, And also this monthly fair value gap, that's also gonna act as an inversion should we get there, or at least I'm, expecting it to. So CPI again will give us the clue. Now, again, because that's the counterparty, obviously we're assuming Dixie's going to head lower. That's what we are obviously looking at so far, risk on. Then I think this is the perfect place for the counterparty pairing of liquidity to occur at. I also love the fact that we went real close here, if you pay attention, but we never took it out. Like, it was so close. Like, look at that, 763, sorry, 263, and look at this high, 262. Like, 1 pip, like 0.01 pip. That's an equal high. So that's obviously deliberately being engineered, and that again supports the idea that CPI may use this as its main area of liquidity to take out. And of course, I think if it does that, then it's because of CPI, it's probably not just going to be like, just a little rate and just lower. I think it's probably going to push it aggressively real hard into this. But on closing basis on daily, I don't want anything above that. And yeah, once you obviously have paired the counterparty, our next stop I think will be on a daily. I'm looking at this weekly low. Sorry, I guess it's this one. So this is a weekly low. They've got a real easy fair value gap here to aim for, and obviously these levels. So that's something to watch. Now, if this opens in a real discount, then CPI could rate this. Well, what if it doesn't? What if it just opens and goes premium, takes out equal highs in this? Well, then you'll expect a reversal, wouldn't you? So it's just wait and see basically what we do first. Focusing on the indices side of things, like the fact that if you pay attention here today, it came down to the weekly inversion fair value gap, and then of course it used it as a support. Sorry, so previous resistance turned support kind of idea, and it just continues to work inside of that daily premium fair value gap. And I've got the 4 levels here, so we got the median. Now we're going to the upper quadrant. We'll get real close. Again, CPI, we're gonna have to wait and see what this does with that information. Just one quick thing I want to see in regards to this wick. So look at that, low 9950. So I want to see if that's the median, because it kind of looks like it. So 05 and then 94. 9950, what is that? 9950. Boom. So it's reacted off of that perfectly. Like, you cannot get it more precise and perfect than that, like it did here. You could have used, I guess you could argue, you could use fair value gap here, but again, in my opinion, and what I see it actually, it's not just my opinion, higher time frame always will have precedence over a lower time frame PD array. Because this higher time frame, the lower time frame is just gonna fulfill the draw on the higher time frame. So these are just pixels, whereas the bigger time frame is the picture. So that's how I see it. So again, so far this is what I'm expecting here. Again, CPI could push it really aggressively high, just fulfill all of this, and maybe even this actually, which would not be surprising at all. It's only 25 handles. So yeah, we'll have to wait and see on this.